Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's program, I want to talk about what a day today has been, from surprises to disappointments and the volatility in the market today. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yet today, indeed, will be considered by many for a day to remember. Probably the biggest story of the day was the fact that Bank of Japan, BOJ, finally intervenes for the first time since 1998. There have been rumors of them intervening because obviously they haven't been happy with the fact that the yen was trading at a 24-year low against the greenback. And this is obviously very bad for them. So they were going to, they've been hinting at intervening, especially as they are stubborn to change their monetary policy at the moment. Even this morning, like I say, the BOJ's interest rate decision, no change, and they still remain negative. But anyway, they still intervened today. In fact, Vice Finance Minister Masato Kanda, he said, "We have taken decisive action," confirming intervention. In fact, rumor has it that the BOJ has used 1% of its reserves to buy the yen. Knock-on effect with this, and we'll talk a little bit more about, is this going to be a game changer for the dollar yen? It's basically a strong yen across the board. Let's have a quick look at the yen pairs at the moment. This is starting off. This is the US dollar and Japanese yen. Okay, as we can see, it breached the 145 level yesterday. Before, after the Fed had their interest rate decision and they did their press conference. But then, when it was confirmed that the BOJ had indeed intervened, look how sharply it basically collapsed. Absolutely collapsed. And actually went down to as low of nearly just above 140.22. If you think about it this way, before the announcement, it was trading at 145.82. After it was confirmed the BOJ had intervened, it collapsed all the way to the low of just above 140.22. But it's not just the dollar, but I want to come back to the dollar because I want to have a little chat about it in a minute. Let's have a look. It was not then, it was euro yen as well. Euro yen, that collapsed as well on the back of this intervention. Okay, actually was trading around a key area actually at the time, 143.57. Then after that, it's actually hit the low just below 138.84. Yes, it's trying to recover now, but anyway, like I said, that was dramatic. The guppy, British pound, Japanese yen, same story. Okay, since the announcement came, it collapsed under that announcement. Trading beforehand, 164.29. After the announcement, it's hit the low just below 139.30. But I want to go back to the dollar yen. I want to have an open conversation about it. Okay, an open conversation about it, because obviously, we're just under this trend line. We've been talking about the dollar yen for a while, and asking when, for example, the uptrend would finish. And as we discussed, it would only basically stop or come under pressure if the Bank of Japan indeed intervened in the FX market, which clearly they have done today. But my question, I want, again, it's open to everybody to talk to me about it. Do you think this is it? Do you think this is the change now? Do you think this is going to be changing direction because they've intervened today? My answer to that is I'm not 100% convinced it's going to change the direction of it. And I will tell you why. And I'll give you some reasons behind my thinking of this. First of all, First of all, the BOJ is not changing their monetary policy. They are still negative interest rates, and they are making no action to change. On the other side, okay, you've got the Fed. Okay, they're very aggressive with interest rates. They are fighting inflation, so they are raising and changing their monetary policy quite aggressively. BOJ isn't. The BOJ, they can intervene, and like I say, they only use 1% of their reserves. They've got plenty of reserves. So yes, indeed, they can intervene again. But most likely, what I think will happen, potentially will happen, if we could start seeing some dollar strength again, they will start doing rumors that they're about to intervene again to try and stem the tide. You know, the question was asked ages ago, what was the cap? What was the level that they were prepared to let the yen go to before they intervened? And we found out the current level they're willing to let it go to is 145 or just above 145. And then that's the highest they will let it go. So will they intervene again? They may do, or they may drop hints of intervening. But the overall fundamentals behind it doesn't change. But you've got two central banks with two absolutely different ideas of how to handle the current economic situation. But either way, we've got to have to see how this carries out in the next couple of days. Because if we go on on an hourly chart, you can see that the dollar is trying to fight back slightly. But more importantly, I look on a longer term, look at the daily, it's dipped under that trend line till I see 100 convinced, see it comes under that trend line and hits the trend line, and then the trend line potentially becomes the resistance. Then I'm not convinced this trend is over, because I really don't think the change in, unless BOJ changes its monetary policy, there's going to be anything different. They may keep on intervening. They might keep threatening to intervene. But in the long term, okay, and we know if it gets to 145, that's the highest. That's when they're going to jump in again. But anyway, for the time being, we are looking at stronger yen. And that is on the back of the fact that, like I say, the Bank of Japan has finally intervened, indeed. So anyway, on other news, like I say, today's been a really big day. It's been a day to remember, a big trading day to remember, because obviously, yesterday we had the Fed. They went big, and they did a third straight 75 basic point rate hike and carried on with more aggressive talk, which we'll talk about again a bit later. S&B did the same. They surprised the market, and we'll have a look at the Euro Swiss. They surprised the market, and they increased interest rates by 75 basic points, meaning they've actually ended the time of negative interest rates for the first time in 15 years. Their interest rates now stands at 0.50. Okay, so they've done that. And then, of course, it's the time of the Bank of England. So if the Fed and S&B, well, they went big, and Bank of England goes home. It basically did exactly what the market was anticipating. There was hope. There was anticipation that maybe the Bank of England may be aggressive, maybe follow the Fed example, the S&B's example, and do 75. And even the ECB did 75. Bank of England didn't. They did 50. They did 50. And we'll look at the cable again in a minute, because that currency pair is under been under a lot of pressure, and currently it remains under pressure as well, because the Bank of England's decision did no help to it whatsoever. But as well, don't forget, I mentioned on the watch along there was the monetary summary was coming out as well, and here's some key points of what came from the monetary summary. Okay, at the same time, basically the vote to 225 was 5 members voted to increase interest rates by 50. 4 voted for a different rate increase. And it turns out these were who the people were. Haskell, Mann, and Ramsden, they voted for 75 interest rate hike. And they've always known to be very, very, very hawkish. Very hawkish. But they voted for 75. Okay, so 3 wanted to go big and do 75. The new member, and there's a spelling mistake there, I just noticed, my apologies. Dringra only voted for 0.25. So this individual is very, very dovish. So it'll be interesting to see what happens in the next BOE. There's some other things they said, which was some positive stuff, actually, for a change. Last time they did the monetary summary, it was nothing but pure fear and negativity. This time they had some positivity, some positive things to say. They said inflation is to peak at just under 11% in October. Don't forget, in the last summary, they said it would go to 13.3%, so slightly better. Okay. However, they did go on to say that they expect inflation, or the CPI, is expected to remain above 10% for a few months after October before falling. Okay, so they still said we're going to have to get used to high inflation in the UK. They also went on to say in quarter three GDP, they can see it at negative 0.1%, which means second successive quarter of contraction, or second successive quarter of decline, meets definition of technical recession. So by quarter three, technically, they can see the UK in a recession. So that's another thing. Let's have a quick look at the sterling, actually, now, while we're talking about it. Because like I said, it's been a roller coaster for the sterling today. It really has, because obviously after the Fed decision yesterday and all that, it had a bit of a boost when the BOJ intervened today. The Bank of England, though, disappointed the market with only raising to 15. It's come under pressure. Clearly, we're trying to see it's trying to bounce back right now. Currently trading at 1.1279. But like I say, it's under that 112 handle, and this is near a 37-year low against the dollar. If you look at it on the daily, we're still way under that trend line. Got plenty of way to go before we can get bullish momentum on this pair. Even though I say that monetary summary has some positive aspects to it, overall the BOE disappointed the sterling bears, sterling bulls, should I say, today. If we have a quick look at the euro sterling as well, don't forget ING are expecting the euro to go up to 0.88 against the British pound at some point. Currently trading at 87.33. So yeah, we can see a bit of a euro strength against this, the British pound as well. On the back, there is a lot of negativity for the sterling. Like I say, the BOE certainly did not help today at all. Right, before we look at the markets, let's talk about something else. Is Wall Street, and that's this question I need to ask, because I've been saying this for so many videos, because I keep saying that obviously I talk about how aggressive the Fed is and how committed they are to get interest rates down to 2%. I keep saying, and the market seems to ignore it. Sometimes they accept it and they go into mass panic, and then they suddenly go, nah, it's going to be all right. They won't be that aggressive. And then, of course, the Fed then says they're going to be aggressive, and they are aggressive. And then the market wakes up and go, Christ, they are going to be aggressive. They are dedicated to get inflation down to 2%, no matter what they do, whatever happens because of it. And like I say, they're slowly getting the message, because I think the market's now anticipating that the two remaining meetings, one in October and one left in December, they're expecting now another aggressive 75 basic point rate hike in October and 50 basic point rate hike in December. Okay, so this is now what the market is beginning to price in. In fact, they're expecting by the end of the year interest rates to be 4.5% by the end of 2022. As well as that, there is fear now that interest rates could be at 5% to 5.25% by early 2023. Now, don't forget, I spoke about this billionaire investor. He says, if interest rates start going above 4% or 4.5%, the market could collapse by about 20%. Okay, so if this is something which they're dedicated to do, then, like I say, we can see potentially very hostile and bearish times ahead of us in the market. Okay, so don't forget that. In fact, there was a politician today who says, and this is their concern, they fear at least 1 million job losses could happen if the Fed keeps on this current path. And like I say, the Fed keeps saying that they're not going to change direction. They're dedicated to get inflation down to 2%. Dedicated. But saying that, for now, the US labor market is still pretty strong. So we had US initial claims today. It was announced at 213,000. Again, so still a pretty low level. And better than that, more impressive than that, continuing jobless claims. Don't forget, this is where people continue to sign on for unemployment benefit. Was announced at 1.379 million versus 1.4 million expected, which means even when some people have lost their jobs, they're finding other jobs or finding new jobs. So for now, the labor market in the US is still pretty robust. Let's have a quick look at the market, see how it stands on, obviously, if they're licking their wounds after yesterday. S&P still under pressure. Like I said, I think Wall Street is beginning to wake up to the reality of the Fed. Currently trading now under a really interesting level. Okay, 137.83, currently trading 137.65. So still pretty, in a very bearish mood on the back of the Fed yesterday. NASDAQ, okay, is the same. Still very negative on a daily. If you look closely, under the key level of 12,000. Currently trading at 11,517 points. If we look at other risky assets, let's look at Bitcoin. Bitcoin trading just above, under 20,000, under 19,000. Currently trading at 18,956. So just under the $19,000 band. Currently trading at just above that key level of $18,438. So yeah, we still have a fair bit of risk off in the market at the moment. And like I said earlier on, is this a case of Wall Street is finally listening to the Fed's message and getting it. But anyway, other things to come. Well, after today, after today, it's going to be pretty disappointing, because the only other thing we got coming is EU manufacturing and services PMI tomorrow. However, today's been full of surprises, so you never know what may happen. Like I say, today's been certainly a day to remember. The headline and the main thing has been BOJ, but surprising by the S&P as well, and their action with the S&P. Bank of England, no surprise, but disappointment and still reaction to the market. So it's still been a really big day. Market as it currently stands, that's the wrong one, sorry. The market as it currently stands, FTSE currently trading slightly in the green, 0.06%. DAX currently trading negative 1.30%, and Eurostock 50 currently trading slightly in the green, 0.03%. So a pretty big day in the market. Certainly the Bank of Japan. Those of you who saw me in this morning session, I had everything planned out this morning just to talk about the Fed last night, and obviously the interest rate decision and the press conference. That, of course, went on hold because just before I went on air, literally a couple of minutes beforehand, the BOJ intervened, and that caused a lot of excitement in the market. So that's a big thing. Don't forget, like I say, you can ask questions or say hello to me or share me your opinions. What do you think? What do you think is due? Do you think the Wall Street is finally waking up to the fact that the Fed is not going to stop no matter what? They're so committed to get to their target, which, which is an interesting thing, actually, because I was listening to an interview today. And like I say, I think the commitment to get it down to 2%, okay, though obviously 2% is usually the target for most central banks with inflation. But to do it so aggressively, isn't it sometimes better to do it and gradually get it down and say, okay, it's going to take us a couple of years to get inflation down, instead of chucking everything in the kitchen sink at it? You do it in steps so that the economy can get used to it. I don't know. I think it's an interesting point. I think that's the case. Hey to you too. I hope you're well. That's an interesting point. I think, are they doing it too much? Is it far too aggressive? Because that's really what the market is scared about. They're scared of them being too aggressive and pushing us into recession. And now they're obviously got the impression that they don't care if we push into recession, because they need us to fall into recession, or the US to fall into recession, to get inflation down to their target. But anyway, let me know what you guys think, what your opinion on the matter is. Or like I say, you can ask me questions. You ask me questions anytime you wish. Let's look at the dollar yen again. That's been the mover of the day. That's been one of the big movers of the day. But that's been exciting. I'll still have to keep an eye on that trend line, see how if we can keep under it. But anyway, not a problem. If you think of a question later, okay, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to it next time I go live on air. So do bear in mind you have that option as well. On that note, I'll be back online again tomorrow. Okay, 3 times actually tomorrow. 3 times. I'm back online tomorrow. Back on at 8 a.m. UTC to discuss obviously the US session, what's happened overnight, the Asian session, and the open of the European session. Then I'm back on again at 12:30 p.m. Not to do a tixee Live, but to do a tixee Live presents #Ask James. Now, don't forget, this is a new series which I do, and it's basically an educational, still live, still like this, still live. But I actually dedicate the episode, instead of talking about the markets, I dedicate it to an educational topic of your choice. And I've had a suggestion sent in from a Pip Insight 42, and they've requested for me to do a short live video on introduction into moving averages. So tomorrow's little #Ask James will be an introduction to moving averages. Don't forget, that's at 12 p.m. UTC, so please come and join me for that. And again, of course, after that, I'll be back online again at 2 p.m. UTC to discuss the US session. And this is the recap on what a week we have had, and what a week we have had indeed. I've just seen I've got a question here as well. Do you think the BOE could have been more aggressive, or are they doing it step by step? In my personal opinion, I think they could have been more aggressive. And the reason why I say that, and I'll tell you why. Okay, the reason why I'm criticizing the Fed for being aggressive is because obviously the greenback, or the dollar, is faring very, very well. It's still a very strong dollar. Okay, so they can afford to do it more aggressively. Yes, the UK economic situation is even scarier than the US at the moment. Okay, but the sterling's weakness, like I said, the sterling is trading at a 37-year low. Okay, it's lowest. I was alive back then. I was only a nipper. I was only young. I was only a little kid, so I don't remember it. But that's so it's almost as old as me when it's been at these levels. So that is scary. But I think they should have been more aggressive, and then maybe slowed it step by step, because they're not giving a lot of confidence to the market. Obviously, the Fed has more tools in their toolbox. The Fed can do more things than a BOE can. But they need to show precedent, because if the ECB can, the SNB can, and the Fed has done it 3 times in a row, Bank of England could do it as well, because they need to prop up the sterling. But that's a really good question, by the way. A very good question. Very good question. Anywho, and the other thing, if they did it to 75, interest rates would be at 2.5 then, wouldn't it? So don't forget, interest rates in the United States at 3.25. So it's a lot higher anyway. But it would have still at least restored some confidence that the Bank of England are in control of it. Anywho, good question. Is there any other questions at all? Anything else anybody else like to ask a question or say hi or anything? Okay, not a problem. Like I say, don't forget, I'm back online tomorrow, 8 a.m. UTC, 12:30 p.m. UTC to do #AskJames. We're doing an introduction to moving averages. And again, of course, at 2 p.m. UTC to do the US session and a weekly recap. And what a week, like I said, we have had. On that note, like I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little episode, but by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you've liked it and you found it useful and interesting and you've put up with me, by all means, give me one of those. It's nice to know that you like what I do. On that note, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest we do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.